Hey guys, it's me, G2. Who knew? So you saw the title of this particular live video. I felt that it was really important that I post this. There are some changes coming to the loan application that are very important. They are changes that will prompt the lender to ask the applicant if he or she has ever served. The reason this is important, folks, is because for 3/4 of a century, since this loan has been on out there in the industry, never ever has there been a requirement for the lender to ask the applicant if he or she has ever served. In other words, unless we self-identify, many times we're not discussing one of our benefits, which is the VA loan. So VA rep worked for a couple of years to get changes made to the loan application. Very important, something we worked on for a long time. We worked with the VA, we worked with FHA, we worked with FHFA, we worked with Freddie Mac and Fannie Mae. VA rep was right in the middle of making these tremendous leaps forward in full disclosure of the loan process and loan product for the veterans. So that new loan application has now a required question for the lender to ask the applicant if he or she has ever served, and then they'll fill out that part of the loan application. And now the loan applicant, after being identified as a veteran, will have an opportunity to discuss the VA loan. You got to remember that less than 12% of us, according to the VA, less than 12% of us take advantage of that loan. Now, one would say, why is that? Well, could it be that simply there wasn't a lot of discussion about the loan product at the inception of the loan process, the application process? Possibly. Could it also be that our own relative industries, the real estate industry, was reluctant to be a great steward of the VA loan for the veteran trying to buy the house? Possibly. But here's the real big reason I'm doing this video. The previous director of FHFA had been at the forefront and spearheaded the new configuration of the new VA loan the new 1003, the URLA, also called the URLA. And as the new document was rolled out and was ready to go into use this past June, the question for the lender to ask that question was actually at the top in the very first section of the loan. I wish I had the ability to share my screen, but I don't. And if I did, I'll have to figure that out later. But the point is that document had the question at the very top of the new URLA, which made sense. Coming right out of the gate, there's going to be a discussion with the applicant if he or she has ever served. In June, FHFA put out a notice that they were slowing down the rollout of the new form over some concerns of the construction and some additional disclosures that were in the form, and it was delayed indefinitely. Last week, we got a copy of the new proposed changes to the new revised URLA. Here's what has happened. The question for the veteran that's supposed to come from the lender, the loan officer, has been moved to a section on the URLA that follows the section that the applicant would sign the acknowledgement of the form. It's actually a section of the form that says acknowledgement and agreement. And in there, when the veteran signs that, when the applicant signs that, the applicant is signing he or she has been, there's been a discussion of the entire form, all of the documents and all of the disclosures within the form have been addressed. Now, my question to you is, if you are applying for a mortgage, would you sign a document before you were briefed on the entire content of the document? I'm going to suggest you probably wouldn't. You would probably want to go all the way through the document and then acknowledge that you've reviewed, there's been a discussion, there's been disclosure, and now you're ready to sign off on the document. Think about it this way. In the loan process, there is a requirement for lenders now, after Dodd-Frank came out in 2010, and CFPB, the Consumer Financial Protection Bureau, put the a lot of requirements in the loan process. But there's a requirement in today's loan process for the lender to deliver to the borrower something called a loan estimate. In the old days, we called this a good faith estimate. The difference between the good faith estimate and the loan estimate is the loan estimate is held to a higher standard of accuracy than the old good faith estimate. So when the borrower speaks to a lender, the lender is going to give the borrower a loan estimate. In the industry parlance, it's called an LE, loan estimate LE. And then after reviewing that loan estimate and after possibly discussing the loan estimate with other lenders, and you now have your LE, you can shop the loan from lender to lender to lender. You got some time to do that in the process of the way we do things now since 2015, when these rules went into effect. But after that's all done, before the lender can move forward, before any money can be transmitted from the borrower to the lender to pay for an appraisal, to pay for other things that might be relative in a loan process, before that can happen, the lender has to obtain from the borrower something called an intent to proceed. Most lenders have this actually formalized in a form, and it's called the intent to proceed. So here's what happens. The loan officer gives you a loan estimate, you review your numbers, and then you decide if you're going to proceed with that loan officer, with that lending company, and you sign the intent to proceed. Let me ask you this. If you sat with a lender and the lender put in front of you a document that said intent to proceed, would you feel comfortable signing the intent to proceed before you ever saw the loan estimate? In other words, before you ever knew what that loan was going to cost. I'm going to guess you probably wouldn't. Here's the parallel now. In that same setting, while you're sitting with your loan officer, the loan officer is going through the loan application with you, maybe over the phone, maybe in person, and there comes to a place in that discussion, as he's going down the form, he says, okay, we've reached the signature portion. Would you please sign this? And you look at the document and you say, there's more stuff to talk about. It's on the next 2 pages or in the next 2 sections. Would you feel comfortable signing that document before you actually had the entire document explained to you? I'm going to guess you probably wouldn't. And if you're a guy and you're ready to sign off on stuff, I'm pretty sure your wife's going to be nudging you with a very sharp elbow. Don't sign it yet. You need to get everything in front of you, all of the document explained. A concern that you might have is, what if you signed off on this document and the lender accidentally didn't discuss with you, didn't go to the next step right after the signature block asking you if you're a veteran, did you ever serve? And what if you're sitting in that chair and the lender accidentally forgot to ask you that question, and you're moving through the loan process, you did not self-identify, another loan product's been discussed with you, never came up about the VA loan, would you feel pretty good about not having the options of being able to discuss the VA loan? Something to think about. What if the other section in there that's under the signature block is about ethnicity? It's something we call HMDA, covered under HMDA. And that section also wasn't discussed with you. In other words, do you want to acknowledge your ethnicity? All of this section is below the signature block as well. So whether you're a veteran or not, would you, even as a layperson, feel comfortable, feel great about signing off on a document before the entire content of that document was provided to you? Now, here's the thing I want to offer to you. I have copies of the original changes that VAREP was part of getting put together, and I have a copy of the current proposed changes. I'll be happy to email you, private message me your email address. I'll be happy to email you a copy of both of these documents. You can look at them, and if you think that it makes sense to sign off on your loan application before you have been given an opportunity to discuss the entirety of the loan application, cool. If you don't think that's a good idea, I would urge you to contact your lender or lenders that you're aware of, and or your members of Congress, wherever you are in the country, wherever you are in the world and watching this video, and reach out to your members of Congress and explain to them why you think it's a bad idea or a good idea that you sign off on a document, a loan application, before the entire loan application has been traversed, discussed, and disclosed with you. I'm happy to help you out. I hope this was a little bit informative. VAREP is working towards making Congress aware of this. We just got word of the new version of this last week. I think it was maybe Wednesday or Thursday of last week is when FHFA rolled out the proposed changes. Now they want to fast track this and put it into play by the end of the year, from what I hear. I don't have that on any authority. It's just a scuttlebutt. My hopes, my goal is to encourage everybody that's watching this video to reach out to their congressional leaders and express to them that their opinion on whether it makes sense for a loan applicant to sign off on a loan document before the entire loan document has been discussed and disclosed. Not going to coach you in either direction. You obviously have an idea where my feelings are on this. It makes little sense to me that if I'm sent a loan estimate, something different, we talked about this earlier, if I'm sent a loan estimate and I get to review the loan estimate, and then I've concluded that that lender is the lender that I want to do business with, I'm happy to sign the intent to proceed. Conversely, and parallel to being asked to sign off on the loan application the way it's currently suggested it's going to be released, conversely, if the lender sends me an intent to proceed, asks me to sign the intent to proceed, and says, hey, I'll get back to you on what it's going to cost you, I'm going to tell you that from my perspective, I would not be signing the intent to proceed. I'd be looking for, what is this loan going to cost me, guys, gals? That's what I would do. So, in conclusion, I didn't rant, did I? I think I was very level-headed about this, but it's a very important item to discuss. I'm more than happy to get this information or these two versions into your hands so that you can share them with anybody you need to share them with. You can see what the construction is of both of them, and let's see if we can't encourage FHFA to rearrange the items on the new URLA, important that we have the lender asking the applicant if he or she has ever served. Keep in mind, for 3/4 of a century, since this loan was first hit the ground in 1944, for 3/4 of a century, a little better than that, there's never been a requirement for the loan officer to ask the loan applicant if they have ever served. And you've got to keep in mind that with all of that being a reality, when there is documentation showing that 92% of us, or 80, was did I say 12? 88% of us don't take advantage of the VA loan, and it has been on the uptick since the two Gulf Wars. I mean, we got a little higher usage, but nowhere close to what it should be. Do you really think that 98% of veterans, 88% of veterans would choose a loan product that is not helpful to their end mission of making a purchase over another product? Remember, the VA loan allows the veteran to make a purchase with no money down. They may or may not pay a veteran's funding fee. It's in place of mortgage insurance. The rates are typically lower on a VA loan than they are in any other product. The veteran loan closes in approximately the same length of time that an FHA or conventional or USDA loan closes. Appraisals have got a bad rap over the last decade or two, but those challenges have been remedied and are on the quick fix to closing the gap on confusion and disparity of disparaging of the VA appraisal process. So you get all these pieces as an advantage. We wore the uniform, agreed to stand in front of a bullet for our country. We are entitled to at least have a shot at taking advantage of our VA loan. It starts with the loan lender, because I'm not going to go looking for a house until I know I can get approved, right? I got to talk to a lender. That's the vanguard. That's the starting point. From there, I can now talk to a real estate agent and let's go shopping for a home. I got off on a tangent. The reason that I did this video truly was because I wanted to make everybody aware, everybody that's going to watch this video, I wanted to make you all aware that the revised mortgage loan application, we call it the URLA, the Fannie Mae Form 1003, are all the same animal. The revised document coming out of FHFA right now moves the veteran question, have you ever served, to a section below where the applicant is going to sign an acknowledgement and agreement. Does that make sense to you? Would you sign a blank document for any lender? If it's yes, then you can trash this video. If it's no, you might want to forward this video to your friends and family. Guys and gals, thanks again for watching. I'm G2. My wife is Lori Clindera. We're realtors for the last 30 plus years with Caldwell Banker. I'm the National Legislative Committee Chair and current VA Rep State Director for Arizona. I'm available on Twitter at G2 Realtor, on Instagram at G2 Realtor, and you can reach us here on Facebook. Feel free to reach out to me with any questions, any comments, and I truly appreciate you stopping and take a moment of your day today to watch this. Have a great one. Talk to you soon. Bye-bye.